Hope you're all well. Sorry about that. Some background noise at my house. You know what lockdown's like. I'll do the dishes myself later rather than listening to them in the kitchen next to my office being done for me. Look, in this lockdown world, and we do have challenges like that, and one of the big answers is to support each other, engage, and that's what we're doing here today. We've got 1 hour to be part of a community outside your normal zone, hopefully refresh your mind, but also let's actually try and learn and develop our skills in really important areas. And speaking of really important areas, there's not much more of an important area for business than money, because a business is about, well, it's not really a business if it doesn't have any money. So as entrepreneurs, you should be thinking about business. Now, you may be early in the creation of that business. You may be somewhat advanced. You may have accounts all set up and want to be asking some more advanced questions. There's a whole range of things. We've got two amazing guests today. I'll introduce them in a minute. But I'm going to try and steer this conversation in areas that interest you. So please don't be shy. Ask questions on the chat, and potentially we'll unmute you and get you to ask them verbally as well. Really want to get that interaction on this theme of managing money. So now on this theme of managing money, we've got two amazing guests. And I'll introduce them. I'll get them to introduce themselves, because I believe a person can tell their own story better than another can tell it for them. Our first guest is Stephen Kong. Stephen works for the Canberra Innovation Network Gold Partner, PwC, a firm that's known to many of you, a firm that's got many different varied people doing many different capabilities. Stephen, quickly introduce yourself. What do you want to say about yourself?
Yep. So my name's Stephen Kong, and I'm from the PwC Canberra office. I've been with the PwC for a couple of years now as a manager, and I just really want to say one of my top tips for you guys as entrepreneurs, which I reckon is something that I've seen at work, is to try and get your structure and accounting and books right correctly from the start. Because that way that can lead you to success in the fact that you've got everything set up correctly. That way, when you come down the track a year or two later, when you're looking at things, you're looking back and you're going, oh, I've done this right. This is correctly accounted for. I put this in the right spot. So that's my kind of top tip for entrepreneurs at the start. But in regards, for me, at PwC, you may have heard us as we're kind of like one of the big fours and everything like that. But within the private clients team, we're not just catering to just the big corporate world. We also cater for private clients, as in our name. So that's small businesses, medium businesses, large businesses, anything that caters for the private market, in the sense that we're going to be always out there looking after you guys if that's something that you come towards us too. And that way, so yeah, that's me for a moment.
Awesome, thanks, Stephen. And just one quick follow up on that. A big tip was to get your structures right, set up your accounts right. I'm sure every accountant would agree about that. What's a really common mistake that people make that they then regret later? Think, oh my God, wish I'd done this before. What's a common issue that you see when you have to fix it up maybe?
Yep. So I think the common issue that I've seen is when people are starting up, they're just thinking, oh, I've got this great idea, I want to go straight into it. And, obviously at the back of everyone's mind is the funding and how much capital they're putting in at the start. And that can, over, a couple of weeks, over months, you're not really tracking on how much money is going in or how much money is coming out, how much you're putting in investment in your own time as well. So I think personal time is a key kind of area that people should be thinking about, is how many hours you're putting in. It could be a side job at the start, something you're doing, 2 or 3 hours in a day, in a week, and then as that kind of progresses on, then you can actually evaluate how much time you're putting into it. Then, you come to a fork in the road and go, do I want to continue with this, or am I going to continue with that? And then you can really tell by how many hours you've invested into it. Another thing is that I've seen is accounting systems as well. So just accounting for if it's in Xero, if it's in like an Excel spreadsheet of how much your cash flow is, by putting it into some sort of online or cloud software to kind of keep that from the start, keep track of from the start, can really help you on later down the track.
Yeah, awesome. Great. Thanks. Welcome, Stephen. And I could see Harry nodding at some of the things you were saying. So our second guest today is Harry Huang. He's the founder and CEO of Tailored Accounts. I'll get Harry to tell a bit about himself in a second. But I want to mention that I've been working with Harry in lots of different ways, particularly as one of the mentors in the Griffin Accelerator program, where he's bringing lots of mentoring, business and insights to founders beyond what might be considered, the role of a traditional accountant. And I love working with you all the time. Harry, what would you like to say about yourself?
All right, thanks, Greg. Thanks, Stephen. And my name is Harry Huang. I started my own accounting firm back in 2008. I came originally from Vietnam. Back in 2005, studied economics and accounting. So graduated in December 2007 and started my firm in February 2008. So just like many stories that you might have, you started your business and welcome to the journey. Now our firm got 30 staff based in Canberra, Sydney and Queensland. I have to say in the last 7-8 years, our focus is really on high growth businesses, especially from the one that really started early days. With my experience in being investors and mentor with Griffins, I've learned a great deal, and a lot of that was from Craig and the Griffin team. As you know, you can't go to uni and learn an investment sort of degree, so you got to learn by spending your money and taking that decent amount of risks. Putting a lot of free times on researching and helping other startup business as well. My experience is when startup came to us, the first thing they say, Harry, I don't have money. I don't have budget for anything fancy like accounting advisory. Then what option do we have? Often we have to look at that as a long-term investment strategies. That means a lot of the works at early days are basically pro bono or freeze. Our firm involved with early startup programs like IACTs. Some of the winners of the program in the last 5 years, they get access to free softwares, free advice from our staff. They come for trainings, learning how to use Xero. And that's really my involvement in the startup community. In the last 4 years, just share a bit of story about our firm as well. We got a lot into automations. Our vision of our firms, even though we consider a small business in Australia compared with Big Four, but our vision is to turn a lot of accounting tax works into automation. So in other words, eliminate a lot of the waste in our industries using technology like automation, AIs, embedded in the work that we're doing. And to me, that is the right strategies for startup business to be able to access into a service where they don't have to pay great deals of money for humans to do it. It would be best if there's a junior robot from our team that can help you with your books at the very early days at zero cost. So that's about me.
Fantastic. And I love that you're applying innovation to your own business as well as contributing to others. Harry, what's your top tip for entrepreneurs? What's the thing that really stands out to you that they should be thinking about?
Yeah, so I think seeking advice is just like anything. Don't hesitate to ask the questions, but you need to ask the question to the right people who have experience in their field. The worst thing I've seen out there is checking with Dr. Google. Right? Go Google and do a search, in the top 3 comes up. It could be someone that pay a lot of AdWords, but the content is not reliable. And that's often what you get. You never scroll through the page number 3 and do a deep research on who is reliable, who are able to give you advice. So that's number 1. Number 2 is, yes, at early stage, you should try to equip yourself with even basic accounting 101 knowledge, whether you in medicals, in ITs, or any other industries. The goal of learning is not just coming off unis or textbook. You can learn how to code in accounting software within a week. All right, so find the right resource, find the right directions, get to talk to advisors and ask them, you know, if I want to learn Xero, what's the channel? Where should I learn it? And my advice would be go and set up a trial account with Xero's. And then from that trial account, you can access to hundreds of free webinar from Xero. Get yourself certified so that you can drive the software yourself if you have to. Yeah. Other than that, when the business started growing up, you start getting traction, raise capital, your time is more valuable doing other things. That is when you find the right advisor and the right firm to help you doing all that tedious accounting work, and then spend your time on what is more important for the business.
Yeah, also, so early days, sometimes you have to do a bit of it yourself, but also what you're saying is there's a risk being too much Dr. Google. And I think that sometimes that's about some of the compliance and other things you have to get right are really, it's about knowing the details and it's not obvious. Can I just hand that one over to you, Stephen? Are there, you know, areas where you see people commonly misunderstand?
I think the common miscommunications or understandings is just going back to what Harry was saying, was just the accounting software and just going to Xero and thinking that you can just pick it up or anything like that. There is some sort of certification, and by learning that sense that you can really start to drive it yourself. As I was saying before, people would like to just go straight into it, and you know, they may think of it their way of learning it, and it, you know, makes sense. You know, it's what their business is and how they drive it and how they understand it. But you know, at the end of the day, when it becomes, you know, so as it starts to get traction and there are other dependent users on reports, it does become a point where people have got it from their point of view, but then other people have their own view as well when they're looking into it as well.
Yeah, Harry, did you want to add something to that? No, yeah?
No, that's fine.
Okay, good. Sorry, just trying to keep the flow. So I think you both mentioned setting up accounting software and trying to get that right, engaging in that, taking it as seriously so you can get reports, which I call understanding your business. And, you know, without some sort of a report about what you're doing, what you're spending, what you're receiving, what your liabilities are, you don't understand your business. What are the most important things that people should be looking for when they start to look at their accounts? Do you want to go first, Harry?
Yeah. So I think they need to understand this obligation from the compliance point of view to start with. Mm-hmm. So if you started trading, hiring people, you got to know, you know, areas including HR and payrolls. In Australia, that is probably the top sort of, you know, compliant high risk area where people can make costly mistakes. We had a number of startups who never believed in pay superannuation before they came to us. And last sort of 12 months, ATO was going really hard on it. Penalty on not paying superannuations would be really, really heavy. So that's number one. Start with the compliance and try to make sure that you have a compliance checklist for like an annual calendar. Things you need to do, paying staff superannuations, report with tax office on quarterly on the basis. End of the year, you've got to know obligation on doing tax returns. If you're doing R&D, you probably should know that in Australia, there's a thing called R&D tax incentive, the best thing ever. And you've got to know as well what is required for R&D. Now that we're in this sort of startup themes, I think it's worth mentioning that the costly mistake people trying to apply R&D is that they're thinking R&D is a one-off end of financial years. You're going to the accountant and saying, here's what I did, and please grab me such and such credits. I think that's a big mistake. R&D got to be your ongoing everyday commitments, and you got to make a good plan and keep a good records of it every single day. And when you come to your accountant end of the year, show them what you've done with evidence.
Yeah. Harry, I think we might dig into the R&D tax incentive a bit more in a minute. I just want to highlight one thing you said, which is superannuation. You've got to pay superannuation for employees, and you get in big trouble and you end up with bigger liabilities if you don't. And Now, in some situations with subcontractors and things like that, it's not super clear whether there's a superannuation requirement or not. That's my message to everyone is when you're in that situation, get expert advice. This is not something you can figure out from Googling it. Stephen, you know, just following on from that, you know, getting those basics of compliance, payroll particularly, what are common issues that you see?
So going back to Harry was saying about the BASes as well. So even with BASes, you know, registering for GST so that you are lodging BASes correctly in the right periods, in quarterly in payments, if that's where you are, registering for TFN, ABN, all those things from the start again. It could be just forgotten because, as I said before, you just go straight into your idea and you just want to go headfirst into it, and just getting those just registrations right done correctly. And going back to the payments for employees as well, getting them, making sure that if there are, you know, people helping you out, minimum wages or anything like that, just making sure that the employment side of the law side is done correctly. So people could be helping you out and just making sure that, you know, your payroll obligations are done correctly in the sense that people are not underpaid or those kind of sorts. Because again, it could be one of those things where people like to help out, and at the end of the day, they want to be paid correctly and remunerated correctly along with the super, and paying those BASes, pay-as-you-go withholding, all those things does come and add up at the end, because if you don't pay your obligations to the ATO, then the ATO will deny you any kind of deductions for those wages if you don't pay them correctly to the ATO. So there's my kind of top tips for that area.
What's your top tip for getting the payroll right? Because employment law is pretty complicated, and you know, it's not as simple as X dollars an hour and you're good. What's the best way of doing for people to make sure their payroll's correct?
Yeah. So having a discussion with our clients, it's more really understanding what the employees are doing for the business, what you're thinking their value is. It wouldn't obviously be the minimum amount. It would be, you know, what do they think they're worth? What can the business afford to pay them? And just checking with employment agreements, just checking those industries to make sure they're correctly aligned up. And then just having a chat with them, go, you know, this is, you know, we'll be paying you part-time, full-time, this is the rate. And having that discussion, because at the end of the day, it is the employees that are there to support your business and, you know, helping you grow along. So the minute from the start, if they're not happy, it's going to be a hard road to kind of travel together, especially during a startup entrepreneurs.
Awesome, thank you. So just somebody on the chat asked me to do what we mean by BAS, business activity statement. This is typically required to be filled out for small companies quarterly. So every 3 months, you've got to fill out your business activity statement and report to the government how much you spent and how much you earned and how much GST was on it. And if you're making a profit, they might want some of your tax up front too on the PAYG system. Not my favorite thing, but there you go. You've got to pay what's owed. I mean, I don't mind paying tax. I just don't like to do it through the PAYG system, but there you go. Harold's asked on the chat, I think this is a really good question. And he's got quite a well-established business, but he's thinking about when you're really tiny, just starting out, what's the minimum that you should have in place? And I'd be really interested in both of your views. Maybe you go first, Harry. What do you think's the minimum that people, you know, got to have?
In terms of accounting system, software, and process?
Yep. Or any other key things that you want to say. Don't forget insurance, which people should have, for example.
Yeah, I would call a checklist for a business at bare minimums. Like I said, number one would be looking at the compliance list, right? Superannuation, payroll, BASes, tax returns, R&D. From there, you then look at software. Let's say to do payroll in Australia, you need software, right? 5 years ago, you don't. You can use Excel. These days you do, because single touch payroll come in place. So you must comply with it. So then look at the software list. You look at Xero, you look at QuickBooks, you look at other options as well on the internet. Try to pick the one that, you know, mostly suitable with your budget and also your skills and people around you as well. Okay, So accounting software to start with, that's the bare minimum. I am kind of like not a big fan of using Excel and be creative on create your own accounting systems. I think I mentored another startup 5 years ago, and this guy really smart, building software in CRMs, and he said, I'm going to build my own accounting software. All right, yes, you can. You can try. And he ended up giving me a demo within about 3 months, and just within 15 minutes, I said it's not worth it, because a company like Xero, in order for them to make a software license for you for just $50, unlimited amount of user, that is tiny. You would spend millions of dollars before you can get a software that works like that. So that's bare minimum, and I think that is a worth investments ever. Next thing you look at is also part of compliance in Australia. That every single thing that you put in your activity statements, you claim GSTs, you pay GSTs, you got to keep evidence. The false message out there is, the minimum is $1,000 invoice that you claim you have to keep a receipt. And so it's not. Every single thing that you spend even costs $1. If you want to claim GST, you got to have a tax invoice or receipt. So instead of keep everything in a shoebox, dumped in the back of your garage, and at the end of the quarter, come to the accountant and they spend 20 hours on it, use software, leverage your softwares. The thing that I use the most, and this is every day, and it costs bare minimum, is I use software on the phone. So every time I go and spend on things on my card, I snap a photo, the receipt is there, the software is using technology. You all startup entrepreneur, you love technologies. They're using LCR, capture the data, dump it in the software for you. At the time when ITL conduct an audit, you got all the evidence. Okay, so that's minimum to me.
Yeah, and a lot of those receipt scanning systems actually connect straight into various accounting softwares like QuickBooks and Xero.
Yep.
Exactly, cost you $30 bare minimum,
Yeah,
and then you can claim all this thing that you are eligible to claim.
Stephen.
So I'll agree with Harry. I agree with that is with the receipts as well, for those people who aren't aware, once you do scan it, you can actually send it to another email address, and it might automatically pick up all the details in that front and do that kind of processing side for you. Xero is quite smart in doing that, and they've got also add-on apps as well. So even though you may just involve just taking a photo and sending it off, Xero do probably 50%, 90% of the work, and you just go, yep, I'm happy with how this is allocated. In setting it all up as well, yeah.
Virginia's asked on the chat, for a sole trader as a proprietary limited with no staff, what's the bare minimum? So I think you'd say you still need some sort of accounting system. Is there any other things that are sort of bare minimum? They don't need to do payroll?
Yeah, so with software like Xero, it costs them probably $50, and that gives you 2 payroll. That's mostly sole trader subscribe with, and then you add another $20 to the app on the phone and keep track of the receipts. That costs you $70 minimum. With using that 2 software only, that saved you a lot of hours and also a lot of accounting costs. And I would say if you do it yourself, every week you probably spend 1 hour maximums on keeping track of all your financials yourself.
Yep.
If you outsource it to firms like us, again, maximum 4 hours a month that we'll spend on the account if you're using software like that.
Yeah, Harold's just asked something I was about to say is effectively when's the right time to employ a bookkeeper or a bookkeeping service so that you can focus on your other business. And sorry, I'm going to throw in my comment. It's not a bad idea to do a little bit of data entry yourself first, so you sort of know what's involved. And especially as an early entrepreneur, there's just no such thing as knowing too much about the money flowing in and out of your business. You really should know all the details. And then as the big business gets bigger, you start to delegate. Stephen, what do you think about that?
Yeah, I agree with that as well. Hiring a bookkeeper does become another cost for the business as well. So there's that cost benefit analysis where, is your time of 1 hour worth someone else's, how much you want to pay them to do it? Is your time, going out and getting business, overall, if you do an average cost, $60 an hour, where if you're going to spend an hour doing it, it's going to cost a bookkeeper, say $30 an hour. So when you get to that point where hiring someone for the benefit of doing your job for you and assisting you that part, and then there's also the added cost of making sure, if it's a contractor, then that's all right. But if it's someone more internally, then it does come along with other on cost as well in hiring someone for a bookkeeping role. It could be a bookkeeper / admin / office person. All those kind of things could be all lumped into one person that can do it for a day for you. And that way you've got another day to spend other things, growing the business in sense.
Yeah, awesome. Now, everyone, please do throw questions on the chat or interact with us, or even turn on your microphone and come in with a voice question. While people think of them, I want to follow up something that was mentioned earlier, which is the research and development tax incentive. This is something that some innovative startups will qualify for, Harry, you mentioned it. What would you like to explain more about that? The benefit is you can get, was it 42.5 cents in the dollar back cash from what you spend on qualifying research and development in your next tax return. It can be a huge source of funding for innovation companies, but you have to do it right, don't you?
Of course. So there's a lot of misunderstandings around R&D as well. Some came to us and saying how it's too difficult. I've heard my friends said that, when there's an audit, it's become really nasty, or it's really easy to make mistakes, or it costs a lot more than what you get, or it just credits in your tax account and blah, blah, blah. All Dr. Google things, right? The reason why I said R&D has to be the best thing ever in this sort of innovation business entrepreneur is if you look at all the successful story about Canberra or in Australia, you look at this how they leverage the R&D tax incentive scheme to grow the business. In Australia, company that claim the most R&D credit from our residents tax, probably all the big giants, company like Google and Apple, surprising, but they know what to do and they know what's the best to get out of our taxpayer money. So R&D is the best thing ever because number one, it's not just a tax credit. So it doesn't mean whether your business, most of the startups at the early stage are making a loss, and you expect that, and you probably know more than me why I'm making a loss. And you think if I'm making a loss, I'm not making a profit, what's the point to claim anything? Because you're not going to get anything with further deductible, right? It's wrong because this is a tax, it's a cash incentive program. So like Craig mentioned, let's say you spent 100,000 on a research and development engineer as one of your staff, work on 100,000 basis, 43.5% are coming back as credits. And then put together with the tax returns, it would come back into a number, let's say 30,000 from your R&D incentives. That 30,000 would come back in cash at the end of each financial year, assuming that you're doing your tax return really early in financial year. That's why during July, our accounting and tax team are turning crazy because we had customers who contacted us in June and saying, Harry, I want my tax returns and R&D to be in on the 1st of July. Why do they want that? Because they're waiting for a cash check of $900,000. So the minute we submit the tax returns, let's say on the 1st or 2nd July, within 2 weeks, you get the cash back in your business after you go. That would give you a runway of 3 to 6 months at least, depending on the size, of course. Okay, that's why it's the best thing ever. It is a bank that you got to back yourself into it. Like Craig mentioned, not everyone's going to be qualified. So it's worth number one, going to industry website and do a bit of research and seeing whether your business activity is qualified or not. And even to the point that you're thinking you're not, then you got to put your thinking hat on and saying from the strategies in the business development, do you want to do R&Ds? Or are you capable of hiring someone and turning your business into R&D? Our accountancy firm ourselves is doing R&D because we love doing R&D. We love innovation. We created, stuff that never been made before, and at the same time we get the credit from the schemes to grow our business. So that's just to start. I can go along for a whole day on this topic. But.
Stephen, is there any particular tip you'd like to give people who are thinking about engaging with the R&D tax incentive?
Yeah, so one of my tips is just going through the Oz industry, as Harry said, to just check that you're eligible. Going through the registration process as well. It's quite a convoluted form itself, in the sense that we've had a couple of clients where they've been under just review from the ATO, and one of the kind of key areas from the ATO is that they say if R&D is more of a scientific experiment, in the sense that you are, you've got a theory and you've got a way of testing this theory, and using the results from your experiment, using that to determine what your next experiment is, in the sense that if you do one thing this way, this is the results. If I do an experiment a different way, this is the results, and using those results to kind of help you out in a feedback loop into your experiment, and helping out in completing that R&D form. Because there are a couple of clients who've just said this is R&D, and having discussions with them, it's getting the documentation and showing them it's a scientific experience. You are researching and developing, not just haywailing, just randomly trying different things, which as part of entrepreneurs you can be doing as well, just trying different ideas, but just recording those ideas and the results of it, showing you how, okay, this is what happened when I did this experiment. It's not working. Let's park that one to the side. Let me try a different avenue, different stream in completing that. And then when you can show the ATO that this is an experiment, and just recording, I spent $20 doing it this way, it didn't work out. I spent another $40 doing it this way, it worked out. And then kind of using that, it does sound like a lot of record keeping in a sense, but when it comes to an ATO review or audit, if it does come that route, then you've got all the documentation, all the paperwork, and it just really helps you out in the long run.
So it's a matter of tracking the costs and the hours worked and things like that, but also the some details about the R&D as you're going along, because you need to build an evidence trail.
An evidence trail.
And R&D and all of that. I think that's something Harry mentioned right at the beginning. It's really easy to not have not to track the information with enough detail to properly apply properly get the R&D tax incentive. So that's an important tip. Michael on the chat has asked, can you get the R&D tax incentive for software development for a software prototype, that sort of thing? And I guess you guys are both going to say maybe.
Again, it comes back to what type of development it is. How have you used the software to get to a stage, and which different routes did you take, and results of that development in a pool, that is.
So it's another area where it is desirable to research this, understand a little bit about it yourself, but probably get some expert advice as well.
Or contact Oz Industries and book the free time with them. They do give you free consultations. Come to them for an hour, explain to them this is what you're planning to do, and tell me whether this is the activities or not. You pay nothing.
Excellent tip. Benefit from your free consultation with the Aussie industry. Come prepared to that question, to that meeting, with some really clear questions. If we do this, is that qualifying? What if we do this? Are these activities R&D? Now they may they may not be super black and white. You can do this or you can't do that, but they'll give you some guidelines. Excellent.
Another question that I usually get from startup is also, I have limited funding, so I've just raised say $500,000, but most of that money will go into such and such. I don't want to pay myself, however. What's the impact on the applications? And or if I don't pay myself cash, but I still pay myself for whatever whether you want to approach. This situation, you got to understand that yes, you work in the business, work for yourself. You can pay yourself as a salary, right? You can take home say 80K, and assuming that you are software engineering, you're doing codings, and part of 50% of your time is spending on developing the business, and 50% is spending on actual R&D activities. So if that 50% of the salary is going back in tax incentives, then you would question yourself, should you pay yourself or not? keep in mind that in order for you to qualify, you got to have cash in exchange. That means you can't just book it in your payroll. You got to protect yourself on that income, and also the company got to pay itself as well. So yep, it's up to you. But if you put that sort of thinking hat into yourself, and if you qualify, your time spent qualify for R&Ds, and why not?
A quick question off the chat. Somebody who's just starting out, should they register for GST or not register for GST if they're expecting to have a modest revenue well under 75,000?
Yeah, under 75 is volunteer. The reason why I make volunteer, I think it's just you got to wait between these compliance costs involved with registering yourself for GSTs. It's not easy and straightforward for you to just print the buttons of Xero and submit it to the tax office. A lot of people make mistakes. So even though you're doing the books yourself or hiring a bookkeeper, still need someone to sort of look at that compliance, doing the business properly for you. So there's a cost for it, right? In a year, it would cost you up to $2,000 just for someone to managing all the GSTs compliance for you. You weight it against the benefits of having GST registrations. GST on your revenue makes no difference. Keep in mind, if you charge a customer $1, you add 10 cents on GSTs, that 10 cents never be your money anyway. Right? So you just collect it on behalf of government and send it back. The benefits, however, is on GST that you can claim on the credit on the thing that you paid. Let's say you are a business that using quite heavy equipment, say you're doing quantum computing and you're buying heaps of equipment at the first, say, 12 months of the business. You budget for 100,000 in spendings on quantum computer parts. Well, 10,000 of that is GST. So the question is, do you want to get that 10,000 back or not? If you're not registered for GST, you miss that part. Someone excited and going Tesla and bought 10 cars, and there's GST on those cars. If you want to run a fleet, let's say your startup doing a fleet, then why not, right? So weighting the costs and the times involved versus the benefit. If the benefit is more than the cost, then you do it. If your business is not likely to spend anything in the first 12 months, nor building any customers or very minimum cost, then no, I don't think you should.
Great. Anything you want to add to that, Stephen? I think.
Yeah, just if it's under 75, it's really pretty much voluntarily based. Again, if it's cost and benefit, if you're not making any sales, then and you're not really purchasing anything, then it really doesn't affect how you run the day-to-day business. But it does come a point where you are buying a lot of things. How are you supporting that cash flow in the sense of, are you putting your own capital in there? Are you generating sales? If you get generating sales, are you getting to the point of 75,000? Then it becomes a discussion with the right advisor to help you out with any registrations as well.
Yeah, awesome. So one of the things I want to draw out is when you've set up your financial systems, your Xero, your QuickBooks, whatever, you need to understand what's going on and maybe have an account and get some advice. But what's a report that you guys always really look at? Maybe one tip for entrepreneurs: make sure you're looking at this report or that report. Me personally, go on, you go first, Stephen. Sorry.
I would say as a startup entrepreneur is obviously the cash flows, whatever's coming in versus whatever's coming out. It can be at a very basic level as well. It doesn't need to be kept in track of what's revenue, what expenses are such and such, what expenses are you paying for. It's really just keeping track of money in, money out. At the end of the day, how much money is coming out or how much money is coming in, and that would just help you in a day-to-day. Okay, for this week I've got to pay for this and that. Next week I've got to pay for this and that. And there's also a little bit of budgeting as well for the cash flow as well. It's always hard to predict what the future is, but if you know kind of the monthly recurring expenses that you want to pay yourself, even monthly rents or anything that's quite consumable that that you'll need to pay for, it's just keeping track of that, because it could come to a point in time where you've just not realized the expenses come up and you haven't accounted for it, and it just throw things out and you're not ready for it. It's those kind of unknowns which always throws people out.
Yeah, totally. Harry?
Yeah, I would say people tend to look at accounting as the kind of like a subject just for compliance, ticking the box with the tax office. Yeah, 10 years ago was like that. But these days, accounting, especially with the data, become quite live, and the access to the data is really as your financials data to help you making decisions, isn't it? So the report that you need is the one that help you make decisions. And Stephen mentioned about budgets and cash flows there. For me, as a startup, you start with a nice sort of simple budget. Looking at revenue models, if you use car rental business, do a bit of modeling. If there's 10 cars in the fleet and there's 100 customers renting the car at a certain dollar, here's the models, and put a bit of growth, 2% growth during lockdowns and 20% growth months on after lockdowns, and even 200% when you start raising more capital, things like that, all right? So it's a tool for you to make decisions, and the report driving back into the demands of helping you to make your own decision. So that's budget, right? And then on the cost line, you want to hire 5 people, here's their salaries, pay yourself minimum 60Ks, and things like that, so that you have a simple set of budget to start with. And the reason why we need it, because it helps you to make decisions. You look at the budget and you say your burns, your monthly burn rate is say $5,000 a month. So after 12 months, if you make no revenues, this is cash that you need, whether that cash is coming from your own money or from investors. That's the question that your investor is going to ask you as well. So it is a tool for you to make a decision on your business. The budget then implement in your Xero. Xero have a ability for you to track down budget and actuals. Just like anything, like I said, it's not just purely compliant reporting to the tax office. It become a tool for you to measure the success of your business. Isn't it good that you set out a target of revenue growth of 2% during lockdown, and at the end of lockdown, you made 3%, right? Isn't it good to have a plan of having 5 people in your books, and then you grow 1 new employee every month, 6 months review yourself with your team, and you say, yep, I'm doing much better than that. Okay, so it's a tool for you to managing your business. Budget is one example. Cash flow, Stephen mentions, you got to look at the cash flow projection to see when that value of death is coming. Planning for your next capital raising, how much do you need? What proportion are you going to spend on X, Y, and Z marketing developments and things like that. Okay, so those are the really important high-level report. Then you drill down. Let's say someone asks from investors, asks you, saying, you show me the models that saying your profit margin is X. And then when I look at your actuals, your profit margin is much less than that. Can you do an analysis and show me what's the reason for it? Then you go to accountant or bookkeeper or do it yourself, go to Xero, do a couple of reports to help you answer that question. So to sum it up, reportings. My favorite report in Xero is everything that I can get data there that is reliable to help me making decisions. Right?
So no favorite report, lots of reports.
Lots of data.
And it's one of the things that, those software systems give you is you can ask, if you can delve into it and what's going on with a particular thing so you can access more reports. I want to mention one report that I always look at in my business, which is accounts payable. That's just a report to make sure I know what I owe to people. And of course I can see it on a balance sheet and stuff like that, but I always look specifically, what do I owe people? Because I don't want to get in a situation I can't pay my debts, because that's called being insolvent, and it's bad, bad, bad. Harry, you were sort of talking about what I will call cash flow projections, which is you set a budget out into the future, maybe month by month, projecting what I think I'm going to earn, what the costs I think I'll have in each month is, and that can also project forward the cash balance that you'll have. Cash now, revenue plus, costs minus, new balance, right? It's a relatively simple thing to do. What's the best way to get started on that?
Yeah, so there's a lot of templates out there that you can get into. But you've got to understand the basic framework of what is a cash flow models. I call it cash flow model instead of just a reporting. Basically, cash flow models is a combinations of your profit and loss. So that's really your P&L incoming from revenues, costs going out, paying salary, staff, contractors, you name it. And then the second component is we call a non-P&Ls. This is including liabilities that you might have, including, say, GSTs, for example. You collected GSTs on your revenues, that's on behalf of the ATO. It becomes a liability in your book. So don't forget to make sure that you have the line item come back out, because like I said before, it's never been your money, and it never will. So any other sort of, non-P&L items, say you hire staff, you got to think in Australia called entitlements, annual leave, long service leave when people stay with you long enough, and often people forgot to make a budget in their P&Ls for this sort of items. When the staff leave, they got, say, 100 hours unpaid leave, you got to pay it out. So in your cash flow, you got to project for it as well. Future income tax liability, like Craig mentioned before, ATO like to collect the tax in advance, and it's called PAYE installments. But in some cases, you haven't been able to pay it before because your business is not profitable. But this could be the year, right? Post-COVID, this could be the year that you really, really gain good profits. So every quarter, you got to make a bit of provision for tax. And that is an item that need to go in your cash flow as well. Because end of the year, when you submit the tax return, that's the money that you got to pay out. Okay. What else there that is not in your P&L? Capital raising. You're doing a raise in 6 months, 3 months, and you know that there's minimum coming in 250,000, maximum could be $1 million. In your cash flow, how are you going to factor that money coming in from your investors, and how that impacting your cash flow? Thing that we mentioned today about R&D, how are you going to estimate your R&D for this year? How do people know that at the end of the year, they're going to get that 900,000? It's all coming from your accounting software, plus a bit of calculation from your accountants, but that is non-P&L. It's never appear in your revenue or cost. So often business entrepreneur won't see it. And if you don't see it, you don't keep that in mind. And this to me is about cash flow, right? It's about putting all the pieces together, not just look at the profit and loss and seeing how much profit that you made, but all the other aspects of business.
Stephen, how do you recommend people go about sort of understanding their cash flow?
I think Harry's pretty much hit the nail on the head right there. He's pretty much gone through the P&L, the profit and loss, and the balance sheet, and even including all the capital raisings. I think with those kind of reports, some clients may find them a bit too number heavy, or too focused on just what they see in front of them, of just an account and a number, an account and a number, and not really sure how to kind of put that in a cash flow kind of turn of view. To me, I just keep it kind of basic, in the sense of, just bringing up a bank statement for a month or a week or something, and just going, what am I paying for now? What am I receiving? And kind of keeping it on an easy level for now, in the sense of just kind of trying to model out, this is what I'm paying every month. This is what I'm expecting, every month, every week. And then from there going, oh, this is something now I'm getting quarterly that now I'm seeing coming through the bank statements. And then a key area on that is the bank statements themselves, and just keeping float of what your actual cash balance is like. Because at the end of the day, it could be just money coming in and out, and then before you know it, it's coming to a point where it's a bit too low, and you've not realized it because you've just been focusing on what's happening day to day, in a sense of that area. Yeah.
So, and somebody asked earlier, should your business have a bank account? I think you'd both say yes, and it's good to know that the dollars in that bank account is what the business owns right now, and that's that. Then secondarily, there's projections forward, assets, or receivable, payables, things like that, where the bank balance will change in the future. That includes, you might have a big insurance bill coming up, or you might have a customer payment coming in, and that will change it over time. It's always got to match up with your accounts. If your accountant or bookkeeper uses the word reconciliation, that means matching it up so that the bank balance is the same as what the accounts say. So that's sort of, I'm partly commenting Duncan's said on the chat, talking about the difference between the cash flow, money going in and out, and actually the money in the bank account. Just because I've got money in the bank account doesn't mean my company's good, because maybe I owe it to somebody. Harold has said he just uses a simple spreadsheet to forecast cash flow, so you can see how it's going in and out. And it means, he says it means we can stress test the business model and see the impact of cash flow with different growth or sales scenarios. So in that Excel spreadsheet, you can change some of your sales assumptions and see what happens to your cash flow. And that can be, it's really good to be able to think of different scenarios to better inform how you manage your business. Look, we're getting towards the end of our hour, so any sort of super last question from the audience, or I'm going to ask Stephen and Harry if there's any particular last thoughts they want to leave people with. This is the most important thing, or just a thought that you've got. Stephen, do you want to go first?
So the last thing that I had was, I think just keeping all your evidence and just keeping track of what's going on. I think we said that from the start that, what we do now is quite memorable, but you say in a year's time or 6 months later down the track, we may have already forgotten or moved on to the next thing, and someone may be asking about it. I know we're all trying to get into it, especially in this COVID world right now, where we're just all working from home and everything. But seeing as we are working from home, you may as well set up the systems right correctly from the start and get that across. In regards to all the reports that we were talking about earlier, they are just a snapshot in time as well. So it's a snapshot of what's happened in the past 12 months, 6 months. A balance sheet is a snapshot of what is happening on that day. So even though it's always great to look at what's happened previously, it's not going to help you out what's going to help you out in the future unless you actually do budget for that and use the information that you've been given. And in regards to the comment before about forecasting and kind of just business stressing, there is apps for Xero as well, where you can kind of use the information from Xero, put into a different app, and it'll provide you these different reports, forecasting, and assist you with the budgeting if the budget system within Xero is not as complicated or is not as easy friendly to use. There are other apps that can be built on the information in Xero or kind of Excel or anything like that. So yeah, reach out to me if there's any other questions or anything you want to chat on to.
Awesome. Thank you so much, Stephen. Harry, some last thoughts from you?
Yeah, I think Stephen covered quite a lot, and yes, an hour within two of us, we covered quite a lot of topic, but still it's on the surface of it. Like I said, if I was to talk about R&D itself, it would be a day. I would non-stop talking for the whole day about it. So at the early day of your startup, keep things simple, but you should understand that the knowledge that we're going to get into doing business is forever learning. So don't take it lightly that Dr. Google is going to solve all the work for you. A simple example is, say, last year we deal with Bookkeeper for governments. Myself at a senior level, I spent at least 20 hours just reading on the laws. So, do you have the 20 hours of keep researching every week on a certain topic, or to a point where you just need someone to look at it for you? A thing that I also want to talk about, we talk about these accounting softwares, the type of work you can do it yourself. One of the things that I think you should look at is also how you see your accountants, your bookkeeper, your advisor, and their roles in the future. These days, software like Xero, they invested quite heavily into AIs and automations. A lot of the work that we're doing today as an accountant is going to disappear. And I say this with, knowing this only happens at least 10 years ago. And here we go, 10 years later, it is happening at a faster and faster pace. So the way that you should look at yourself and your accountants and their roles in your business in the future got to change as well. We're not a people, so-called numbering people anymore. We're not people just taking up the checkbox from the tax office and get your compliance in the roles anymore. Our roles is changing, and we are equipping with more tools and knowledge that allow us to help you with your business, including predicting the future. How cool is that? So whether or not you see us as magicians in the next 10 years or not, it is true that we hold a lot of data of many organizations. It's in here, it's in our modelings, including your business. So, you know, look at us as your advisor. Talk to us more than just sending an email. When we can see each other in person, let's catch up to talk about business.
Awesome. Yeah, build a relationship with your expert professionals, accountants, bookkeepers, etc. They should look. One of the advantages neither of you mentioned is that accountants interact with lots of businesses, and they see certain patterns, and that gives you a real visibility of things that business people should watch out for, or other insights. You know, all of that sort of thing. So look, thank you very much, Stephen. Thank you very much, Harry, for, yes, I know, scratching the surface, but hopefully we gave people a few tips, a few things to think about, just in terms of managing their money, building their financial systems, understanding their business, the cash flow, etc. For everyone, thank you really for tuning in again this week. I see lots of familiar faces, a couple of new faces. That's awesome. You know, I always like to end these things by challenging everyone to act, to do something. So we've just had a really nice, really nice conversation. Harry and Stephen have given you some great tips and insights about things to watch out for, things to do. What I want everyone to do is go away and think, what can I do for me in my business to improve the state of my money management? It could be, you know, sign up to Xero, or it could be have a new conversation with my accountant, or look at a new report, or it depends where you're at, what you might choose. But I really challenge yourself, do something. Don't just go away thinking, wow, that was cool. I learned, oh, got some great tips in that hour. Do something with it. Love everyone to keep doing things. Keep innovating, keep looking after yourself. Remember, you're part of a community. And remember, managing your money, talking to accountants, this is not the boring part. This is essential. It's not a business without that. So look, thank you very much again, Stephen, Harry, you awesome local accountants with great expertise. Thank you very much for sharing just the tip of the iceberg of your knowledge. And I know everyone else will appreciate that. Everyone else, I've got some cracking content for you next week. But I've sort of run out of time to tell you about it, so you'll have to see the email update. See you all, and plus more of your friends next week. Thanks, everyone. Awesome.